think this is live. So welcome everyone to this Friday's version of the Hummingbot Live. I think we're going to call Hummingbot Live now, a weekly live stream series where we design, code, and run quant trading strategies using the Hummingbot open source framework. Hey everyone, my name is Mike. I'm one of the co-founders of Hummingbot, and me, along with our CTO Federico, we're the ones who kind of like do these kind of live streams to show people what Hummingbot is capable of. So, all right, so let's get started. I think there's a chat. Actually, let me start the event on Discord. So this event is starting. It's starting. Hey, wait, never mind. It looks like I'm actually half an hour early. So, this is actually whoops. Okay. Shit. You know what? Am I early? I actually am early. Okay. Now what? Now what do I do? Okay. Now I think I need to either continue streaming or I need to end the broadcast. Well, let me check YouTube to see how many people are actually watching. If no one's watching, I'm gonna end this broadcast and start over again. But if people are watching, I might as well just start the live stream. Let's see. Oh shit, there are people watching. Okay. Okay. This is originally scheduled for half an hour from now, but I think I was like so eager to start this thing that I started it half an hour early, apparently. But anyway, but we're here. We have 11 folks watching, so we might as well start the event and get things started. We'll probably go for more than half an hour anyway. So for those of you who are on Discord, hopefully you'll be able to join anyway. I think in Discord I'm going to start the event. Let me start this event. Actually, let me edit this event so it's starting now. Starting now. 1 second. Event info. Start event. All right. I'm just going to start this event. Start event. Okay. All right. So the Discord event started, but overall, yeah, I think I'll probably look at YouTube for the comments more, since I'll be primarily using my terminal window and everything else like that. So I won't be looking at Discord as much, but I think I'll try to leave it open in this other window here, maybe, so I can see what is going on. Okay, all right, that works. Okay, so yeah, I see the YouTube chat and the Discord chat, so you can feel free to drop comments in either one. But overall, today we're going to go through a couple of things. The first is I'm going to round out the arbitrage strategy discussion that we started last Friday, and I'll kind of like show you kind of end to end, again, kind of like setting up a Hummingbot and running Hummingbot with alongside Jupiter and another central exchange and arbitraging a token between the two exchanges on Solana. So the Solana connector will be in the upcoming release, which is coming out today. That's version 2.2. So this release has a lot of new stuff, including the new Solana connectors, a new Hyperliquid spot connector, updates to the DEX connector, as well as some new strategy V2 controllers, Arbitrage, as well as a new one called Grid Strike. So so we encourage you to check it out. I think the release is going to be done in the next few hours, but you can already start using the development or the staging branches of both Hummingbot and Gateway. So that's what I'll use today to show how the arbitrage you can do DEX arbitrage using Hummingbot. So in the second half of the live stream today, I'm going to start introducing the concept and the theory behind liquidity provisioning strategies. So LP strategies are something that I personally have been doing a lot of this year, and it's actually worked out pretty well. And so I think I've got a pretty good understanding of how these types of strategies compare to traditional market making strategies, the trade-offs you make, the pluses minuses, and how you can also kind of exploit both kind of like traditional order book based strategies alongside kind of AMMs. But today, because all those strategies, in my opinion, are still very much up in the air. It's unclear exactly what types of strategies are optimal in the long run. Right now, I kind of approach it more as like a research effort. So I'll try to show you how Fede and I are researching it currently using our Quantlab repo. Okay, so I think that's the intro for today. Let's get started and set up our arbitrage bot on Solana first. And as a reminder, feel free to drop any comments either in Discord or in YouTube. Okay, so let's go ahead and first go ahead and go to the directories that we had earlier. I think we were creating. I think we were using this temp2 directory last time. So so yeah, this is the directory we used last time. I'll make this a little bigger. Full screen. Okay. All right. So last time we created a gateway directory. We installed the gateway middleware repo and the Hummingbot client repo last time. So this time, let's update those two repositories and ensure that we're on the latest branch. So so last time I think you used master, but because I'm actually gonna check out staging. So staging is the pre-master branch that we just recently have created, and our QA team is in the process of testing it and ensuring that the staging branch doesn't have any issues before pushing it to master. So by using the staging branch, we're basically ensuring that we're kind of essentially using the 2.2 release that's about to be coming out today. So we will then see. So we'll pull origin staging. This ensures that we have the latest version of staging, because I probably have like an older version of staging on here earlier. And then I will also ensure that I'm in the right Conda environment. So Conda activate Hummingbot, compile. Okay, so this compilation step, in case there's any changes to the Python code, we'll kind of update that. And then finally, I'll just to make sure that it can run, I'll just run start to make sure that the Hummingbot client portion of the code can run. So looks like it's working properly. Enter my password, and then I can do a quick check with the balance command to see that the exchanges I added before are still working. And yep, just like before, last time we added the OKX demo account, and which has some test assets in it. And then today I think we'll use probably WIF again and set up the arbitrage strategy between WIF on OKX and WIF on Jupiter. Note that currently it says gateway is offline. That's because we haven't started gateway yet. Last time we'd already connected gateway to Hummingbot using the installation path. So if you're I'm not gonna go through that again today, but if you want to go through that, and you can feel free to watch last week's live stream. So let's do the same thing now for gateway and ensure that we're on the updated version of gateway. So last time we were using main. So this time let's check out the staging branch. Again, ensure that we're in the latest version of staging. Okay, so now that we have now that we're on this, let's make sure that we have the right dependencies. So yarn install will install the new dependencies that are needed. So sometimes, because we're always adding new connectors to gateway which require new SDKs, the package JSON is continually being updated. Next, we'll run a yarn build to basically make sure that we're compiling the code necessary. And then finally, the last step is running gateway setup. We don't need to copy over the client cert because we did that last time, but we do need to copy over these new templates because there might be new exchanges with new token lists or new configs that are necessarily set. Okay, so that's working as well, and then we can finally, the last step is simply running the yarn start with the passcode that we initialized when we define the certs. Okay, so now gateway is running, and then if we go back into Hummingbot, So now we can see that Gateway is online. So now Hummingbot and Gateway are connected. And now we can check out do a Gateway balance and check the balance of the wallets we've set up. So just like last time, we only set up this Uniswap Ethereum connector. But now if we do Gateway list, we see that the Jupiter connector is now available, and it's available. We can connect this using the Solana blockchain. So now let's this is basically in the upcoming version of Hummingbot that's coming out today. So now let's go ahead and set up our Jupiter credentials, our Jupiter API key in here. I'm sorry, our Solana wallet. Let me just find it in our separate repo. Okay. So now we can add our Jupiter credentials by running gateway connect Jupiter. So there's only one choice here for the chain, which is Solana. So you can just hit Solana, and then you can. So basically, the way Hummingbot works is that we associate a wallet with a chain, and then once you're running on that chain, then you're using that wallet. So right now we can pick, basically we can pick either the mainnet or the devnet, and then here we'll pick the mainnet, and then okay. So this actually is a bit of an issue here. So this is actually an inconsistency between the way that we define node URLs for Solana, where it's a list, versus here. Where this is actually incorrect. So this is actually a parsing error. I would just pick yes here because it should actually be fixed later on. And then finally, we're going to enter in our private key. So even though this node URL none is here, what's actually happening behind the scenes is that we're actually there's a no URL list. However, we should actually go and change our node URLs, because the node is a really important part of the DEX trading experience. And so for me, I have a quick node account, so it's like a $30-40 a month plan to access private nodes. So I'm going to use my quick node URL instead of the public Solana node, which should make trading on Solana a much better experience. So let's do that before we actually set up the bot, and so I can show you how to do that. As well as we also may want to add additional tokens to the list as well that we want to trade. So let's go ahead and stop Gateway and add and do those things like the upkeep, so to speak, in order to use Gateway properly. So the best way to do that is to edit the config file for the exchange or the chains that you want to edit. So here in Gateway, we just accessed our IDE. So in Gateway, there's so basically what we did before was we copied the standard templates for the configurations for each chain and each connector, and we copied them into this config file, this config directory, which basically defines our settings for each of the DEXs. So for Gateway, we can see for Jupiter, we can see that we're assuming a default gas cost of 0.005, and we're actually using a 5% slippage. So we could reduce this, but if we lower the slippage, then if we run Arbitrage bot, a lot of trades might fail. So let's keep this at 5% slippage and assume this is the gas cost assumption, which is about, I think, like 5 cents or 5 or 10 cents. But these assumptions are important to point out because they're used when you're running your bot. Similarly, there's a Solana.yaml file here where you can define the nodes you want to use and some other things like this. So yeah, this is actually why, because we're using node URLs as the field, and I think Hummingbot expects node URL without the S. That's why the none error was happening. We'll probably fix that in the upcoming release. It's a very simple typo error. However, note that we are using the default API mainnet beta node URL for Solana. You could use this, but if you're going to run an arbitrage bot where it's kind of constantly ping the node, checking prices on a second-by-second basis, you're probably going to hit rate limits using this public node pretty soon. So instead, I'm going to use my Solana node. Just give me 1 second. Let me find it. 1 second. Sorry. Yeah. There you go. Copy. Okay, so now this is structured as a list, so you could put it in multiple here. I'm actually going to put the one I have in front of this one, like this. So so now, oops, this. Okay, yeah. So now we have two node URLs. Node 1 is this one, and then I use a comma to separate out the other one. Yeah, this one probably works too, but we're going to be testing primarily mainnet. The advantage of Solana is that fees are very cheap, so it's fairly inexpensive to test on mainnet. But so we added the node, but also take note of the fact that the token list we're using is located here. So currently, because Hummingbot is a symbol first kind of like code base, we're resolving this symbol addresses using something called a token list. To be honest, I think if we move more to DEX trading, we'll probably make some of the stuff more address first, because especially when you're trading a lot of the new tokens, having to do the symbol lookup adds sometimes an unnecessary step into your trading process. But at least for now, we're keeping it the same as we did before because we don't want to introduce changes too quickly. So that's why at least whenever you want to trade a token, you'll probably need to add that token or at least confirm that it's correctly defined in the token list. This can be the source of a lot of gotchas because there are a lot of tokens with different symbols. So we've had instances in the past where we had to edit this list in order to make sure that we're trading the right token. So I think WIF is actually one of the ones that we have to do. So it's a good. That's actually why I picked it, so we can actually go and ensure that we're trading the right token together. Okay. All right. So so now let's go ahead. By the way, I see a comment here about adding ML and data science Hummingbot. Yeah, it's already there. It's in a separate repo called Quantlab. The thing with like data science and ML is that it's like you don't. There's different code bases now for different purposes. So the core Hummingbot code base is really designed to be like the engine and just connecting all the connectors. We have a gateway code base that's middleware, and then we have Quantlab for more kind of like data science research. So so yeah, if you're interested there, I would just check out that repo. I'll probably show it later on today as well. But I think Fede actually does more of that stuff in his live streams. Okay, so so now that we have our node set up here, let's go ahead and look at the token list that for Solana, which is over here. And this is hard to edit, but I promise you, we are gonna go and find. So now the issue with some of this stuff is that there can be multiple assets with the same symbol. So if we look at WIF here, there's one WIF here. And then there's another WIF. I think. Oh, actually, great. This is the only WIF. Okay, great. Yeah, if this is the only WIF here, that's great because I think we had an issue with. I think there's an old WIF that was before. But if you want to add a new asset that you want to trade, you'll have to kind of put it into this kind of format here, like this. Okay, so whatever kind of, if you want to add a new one, or you can also remove the ones in this list. So you should try to definitely make sure that the token list for the chain you're trading is correctly implemented, and so that essentially when you trade a symbol, the address is the right address that you want to trade. All right, so now that that's set up, we can go ahead and actually actually run our bot, I believe. So let's go ahead and go into start here. Actually, no, this is gateway. So so I think I confirmed that we added the wallet, and then we added the token list correctly. Let's see. So do anything else when we do? Yeah, I think that's it. Okay, so let's go ahead and go back to Hummingbot. We're here. Okay, and then before we start the bot, let's confirm the balances. So in OKX, we have about 144 USDT, and we have 42 WIF, which is about $78. Gateway, let's see. Oh, sorry, gateway's offline. Forget that. We need to start gateway. Okay, so now gateway's online, and let's do that again. Oh, call to balance has failed for some reason. Yeah, this is probably just a timing issue. Okay, yeah, looks like it did fetch bounces. Actually, wait, no, sorry, this is no, actually, never mind. It looks like there's something here with our gateway where it's not fetching the right balance. So we can see. Let's see. Fetch failed. Okay, so it looks like I think I need to do something different with my node. So I think I know what the issue is. So let's get a cursor, and I'm gonna just get rid of. I'm going to use my own node here. Let's see. I'll just use the quick node one because that one should actually work. This, like that, and then I'll restart gateway. Okay, so now I'm only using my node, the quick node one, and started gateway again. So now let's see if we can actually fetch the balance from Jupiter. Still something going on here. So I wonder, this actually could be a node issue. Because right now I'm not connecting to Jupiter for some reason. So yeah, these are kind of issues that unfortunately that you need to resolve, because currently I think gateway is actually doing what's supposed to do, which is call the API, try to fetch the balances. But at least for some reason right now, we're not returning the endpoint. So let's go back to the easiest way to do this. So let's go back to the basic what we had before. So this is the original configuration where we're just using the standard Solana node cluster, and so that should actually at least give me a response. So let me try that and make sure that at least that works before using the private node. Okay, we're back on, and so let's try that again. Okay, so this time it is returning a balance. So it looks like the issue is actually the private node that I'm trying to use. I need to investigate. I'll investigate later on in case we can't use the public node. But it looks like there's something going on with my quick node account or node, and so that URL wasn't working. Okay, so now that we're just using the standard public node, let's see that works. And if we run into kind of like rate limit issues, I have another Alchemy node and some other nodes we can try. But overall, I think getting the node URL correct and making sure that our RPC URL is actually returning something is an important part of running DEX strategies. So first, before we proceed, let's look at our WIF and USDC balances on this wallet. Because there's a myriad number of tokens available, we have a connector tokens command to allow you to define like for which on a certain chain which tokens it should fetch. So for Jupiter on Solana main and beta, we want to add the WIF and the USDC tokens. So now if we run gateway balance again, it'll show the balance of our WIF and USDC. So as you can see, we have 67 USDC and 15 WIF on Solana. And let's check again what our on OKX we have 144 USDT and 42 WIF. So we should be able to run an arbitrage strategy. And so the one we recommend now is the arbitrage controller, which is new in this release, version 2.2. And so it doesn't have a dashboard page yet. However, you can easily create a controller configuration from the client, and then I'll show you how to run that using the client as well. So first, we're going to create a controller configuration, and we'll create it for arbitrage. So the only question we're going to add is the total amount of the quote asset we use in the trading. So here, let's do something like 20, because I think we have that consistently in our trading. So let's use 20 for now in our trading, and then we'll give it a name of the controller. So we moved this format where instead of asking a bunch of questions here, we just create the file, and then you can just edit the file afterwards. I think it's a more it's more consistent user experience. So let's do that first, and let's give it a name that allows us to find it later on. So let's call it arbitrage controller WIF. So now that it says edit the file in your IDE, and then we can run it afterwards. So let's go ahead and edit the file in our IDE. Where's my IDE? So it's gateway. Hummingbot. Okay, so here's actually this is, I'm not sure this is the right one. Yeah, okay. So let's exit this, and we will we will cursor here. So I just want to make sure I'm actually the right one. Okay. Okay, so this is the right directory here. Okay. All right. So so in controllers, I'm sorry, in conf controllers, this is where the configuration for the controller we just created is. So you can see it has an ID and there's a bunch of fields that we're going to edit to define the arbitrage kind of corridor that we want. So this we're going to use $20 total because we have at least that much of WIF across the two exchanges and USDT. So the first one we'll define as OKX, and then we'll make this WIF USDT. So the second one, we already have Solana Jupiter here filled out already. So here we can add WIF, and then we want USDC as the second one. The rate connector, we're going to use OKX here for the rate connector because we have OKX, and so and then we have USDT for the quote conversion asset. This helps it kind of define a single kind of like a base asset to use for conversions. By the way, okay, let me answer a couple questions I think from the audience before I proceed. Supreme Dream asks, for those of us who aren't good at coding, would you suggest using VS Code extensions like C-Line to assist? I use Cursor right now. I mean, that's kind of what I usually when I don't know what to do, I'll pop out a window like this. That's like, what type of file is this? Just you can ask kind of very basic, questions even, and I think kind of like this will kind of explain, what a YAML file is, these things. So I this is how I do it, but I think everyone has their own tendencies. The one thing I noticed is I don't think you actually need to know how to code to run Hummingbot, or to use Hummingbot effectively, is really about, I think it's actually more important to understand that a lot of these strategies are actually quite complicated once you dig into the details. For instance, arbitrage, as we'll see, it's not just about, buy low, sell high. It's also about defining the transaction costs involved, making sure that you're capturing all the costs involved in terms of gas and slippage and everything else, but also ensuring that like when you do the trade, you're logging the fees correctly, you're calculating the arbitrage profit, and you're doing all this kind of accounting to ensure that you're actually making a profit. So it's kind of like the strategy. Ideally, if you want it to be something that you can just run for a long time and have it make money for you, it has to do all those details. And so I think understanding all those details and essentially being able to automate that in a configuration file like this is really the devil in details of running quant trading strategies. TechnoKid 2020 says, I haven't met a person yet, even people who have experience writing down arbitrage smart contracts at work and are profitable. That only shows test nets which are harder. I totally agree. And I think that's actually the nature of arbitrage, because it's kind of like for arbitrage, by definition, if an arbitrage exists, then it's not going to be there for a long time, because as you capture it, it's going to go away. So that's why you're probably not going to see people kind of doing public demos of real arbitrage opportunities. Why? Because they would have captured them already. So even in this demo today, we'll probably see that it is possible to eke out small amounts of arbitrage between different pairs, depending on how well you select them. But in a normal, quote, normal scenario like today, we're probably not going to find lots of arbitrage opportunities. The reason you want to run arbitrage bots, is to wait for times of dislocation. So for example, when the market a few days ago dropped like 10%, those are the days when arbitrage opportunities would be the best. So ideally, you want to set up your arbitrage bot where it's like, it's maybe like capturing like 0.001% or something like that. But it's capable of capturing the large opportunities when they arise. Okay. All right, but I think well, so today I'll show you kind of how to set it up so that you can at least the art of arbitrage is having a bot that can run reliably, and so when it happens, unfortunately, that's also when the chain is going to be the most congested. There's going to be the most kind of volatility in the market. The gas fees are the highest. So can you actually set up a system to capture that opportunity when it arises is actually a much harder task than it might seem in the very beginning. Okay, all right. So now, let's go ahead and set this. So here are some of the parameters that we define in the arbitrage controller. We haven't gotten this fully documented in our docs yet, but we probably will do so in the next few months. So these V2 strategies in generally are not as well documented because they're a little bit more complex versus our V1 strategies. But over time, I think the same types of documentation will exist. So overall, basically to summarize, we're going to use a total amount. Quote defines a total amount of assets in the quote currency. So the quote currency is USDC or USDT here. So we're going to use 20 USDT across this trade. We're going to use the same exchange. We're not going to use the candles config here. For arbitrage, we only need to define the two exchanges and the pairs that we need to trade. And this min profitability is the percentage profit that we need to make before we do a trade. So initially, I'm going to set this somewhat high at 1% because I don't want to trade all the time. But over time, I'll probably lower this in order to try to at least make sure I can get a trade done effectively. This delay between executors, this measures kind of how often you do a trade. So I don't want to do a trade too often. I just want to kind of be conservative in the very beginning. So I'll set that I'll set it at 30 seconds since I don't want to bore you guys in the live stream. And then finally, this one, max executors imbalance, defines kind of how many buys and sells you can do before waiting to do another one. So currently what this means is that I'm going to do one buy, and then afterwards I need to do kind of a one sell before I do more buys. So I think I can take a bit more imbalance here. So I'll do a max balance of 3 here. And then these two are, I think, are fairly self-explanatory. So now that we have the configuration for this defined, we just need to add this script to, we need to add this controller to the loader script. So I'm going to take the file name, I'm going to copy the file name, and then I'm going to go to actually I've not added this. So let me add the loader script first. Yeah, so let's see, go ahead. So we have a loader script we use, because scripts can be kind of all things. So yeah, naming is not our forte here at Hummingbot. So we're going to create a configuration for the loader script. So the loader script is this one called V2 with controllers. Here are some sample scripts that kind of show you how to run basic strategies. But we're going to do this loader script because we want the script to just load the controller that we already defined. So we'll create a script config for that. And we just need to add in the name of the file that I already have here. Okay, so I think this should work. Okay, and then yeah, we want to keep it the same name that we have here, conf v2 with controllers v1. Okay, all right, so now let me just check that we have the right script here. So yep, looks like it has the name of the script correct, because I can find it in the controller directory. And so now we should be able to actually just run it from here using command line. But I'm actually going to use the quick start. Actually, no, I won't do the quick start now. I'll just do it this way, just so you can see how I do it from the command line or from the client, and I'll show you how to do it from the command line later on. All right, so we just need to start the script and this v2, this loader script, and pass in the config that we just defined earlier here. Okay, sorry, something's going on. Wait, something's going. Okay. Oh, wait, sorry, something's going wrong. Let's check what the issue is over here. Over here, let's see. I'm not sure what's going on here. All right, so let's see. Yeah, seems right to me. Let's see. Try the quick start. I'll do the quick starts, and that's what I normally do anyway. So I typically do this quick start method just to, so cause this command already has my password, the file that I want to run, and the loader script. So this is an easier way to run it from like this. I'll just do this. Okay. It could be the oh, I see what the issue is. I think there's actually an issue in the is it wait a second. Okay, I think it's Jupiter Solana. Yeah, it's actually Jupiter Solana mainnet beta. So I think the default, unfortunately, it looks like the default the name here was incorrect. So, but that's why we're doing live stream, so we can live debug issues on the fly. So the issue is that the default name here, it's actually Jupiter Solana mainnet beta. And the way you know this is because if you go into the client, the name of the connector, when you pull up the balance command, should match what it's trying to pull. So now I think this is correct. So now if I do this again, let's see. Okay, so now it looks like it's correctly doing it. So what Hummingbot's doing now is initializing the order books, and it's pulling the two exchanges. So I do get this error in terms of fetching rates from Binance because I'm in the US, so where Binance is restricted. But I believe that is not used here because we're using OKX as a rate exchange. So we already actually see the arbitrage is happening. So it's actually already assessing the arbitrage right now. So I'm going to make this a little smaller so I can see the whole thing in one table. Okay, so essentially, the status command for the arbitrage controller strategy basically prints a bunch of information which tells you what it's actually doing. So what it's trying to assess are two possible trades. One trade where it's buying on market 1 and selling in market 2, and the other trade is where it's buying on market 2 and selling on market 1. So for each of these two trade possibilities, Hummingbot calculates the price, which is the actual prices for buying and selling from the two exchanges. It calculates the P&L percentage based on trading alone. And then it also calculates the fee associated with the two. And so essentially, there's the fee percentage or transaction cost percentage and the trade P&L percentage. And so that your actual profit percentage is the combination of the two. So currently we can see that there's no kind of clear arbitrage opportunity currently because we're losing a little bit of money on this trading corridor. And once you add the fee is actually pretty low. So it doesn't add that much, but overall there's no kind of clear arbitrage opportunity currently in this pair. Now WIF and USDC are also, this is not, these are fairly large assets. So the best way to do this, I think, in my opinion, is to identify, tokens which are likely for arbitrage opportunities to occur. So WIF is probably not a great one because, as we can see right now, WIF has been around for a long time. OKX is also, a large exchange, and so WIF doesn't move a lot. However, some of the new meme coins that are launching are probably better candidates for this because they're more volatile. People have more opinions on them, and so I think it's more likely there. So let's try to find coins which there's more likely to be arbitrage opportunities between that and the other coins. So if you guys have any suggestions you want to put in the live stream, I'm happy to try it out. But overall, I think let's try to actually find a better coin. Let's keep this running. We'll actually, I'm gonna lower the profit. Actually, I'll lower the profit percentage so we can see if we actually do make any trades. But I'll lower this to I'll just lower it to even like 0.001. So basically, any type of slightly profitable trade, we will go and do this. So let's keep this running. But I also want to start introducing kind of like basically like LPing because I think the overall I think it'll help us find a strategy. Actually, let's do this where let's see. So so we actually did do an arbitrage just now, and after we lowered the profit percentage. So here what we did was we bought WIF from OKX, and then we sold WIF from here. It said the pull change. Let's see what happened here. It is possible that let's see. Oh yes, yeah. This is where we're hitting the rate limit on the node here. This is the issue with using the Ethereum mainnet one. So it did resolve. So we actually did complete one arbitrage loop. We bought at OKX and then we sold at Jupiter. So if we run the history command, that'll tell us the trade on the two accounts and how much money we made. So it actually did look like we made a small amount of money on the arbitrage because so we bought at OKX, kind of here, and then we sold here. And so we can see this in more detail if we run history -- verbose, because this gives us the actual trades in addition to the table. So we can see that we did two trades. We bought at OKX at 1.826, and then we sold at Jupiter at 1.83. So we actually did make some arbitrage profits on this trade, a grand total of 0.01 cents. No, $0.01. So 1 cent. Yes. So, but this is how you start, So I think that obviously that's not a great outcome. But the fact that we were able to capture any arbitrage on a live bot with very little work like this, I think is a promising sign. Where I would go to next with this is finding kind of new tokens that are more likely to where an arbitrage opportunity might arise. So a good example might be a small exchange where they newly listed some new meme coin, and now it's likely that as in the first few days that coin is listed on exchange, you'll see arbitrage opportunity between that exchange and the primary exchange where the asset's trading. For meme coins today, I think a lot of them are coming from Solana. So Jupiter is going to be, because it's an aggregator, is going to be like the best channel to kind of like find the optimal trading, for any size trade on Solana. So we'll keep this running. It might find. Actually, never mind. We're actually hitting an insufficient balance error now. Got it. So right. Recall that we actually we're using 20 order amount for each. So that means that on each side we probably need to have like $10 worth. And currently, I think on the Jupiter side, we don't have enough. So now, we actually should go out and buy some more WIF so that the bot can continue running. So let's go ahead and go to Jupiter and just buy some more WIF into the same. I actually don't think I even need to stop the bot. I think that once the WIF is in the wallet, the balance command should refresh it, and the bot should keep on running. So I'll just sell a small amount of USDC, and I'll buy some WIF here in order to give my bot some access. So I'll just pay like $20 worth. Okay. All right. So there's a few kind of things you can do. You can do change the settings here, but I'll just do this all like this. Okay. All right. So but overall, we'll just leave this bot running because so now that it should, let's do a gateway balance again. Should update our Solana. Okay, so now I have 15 WIF here. Hopefully that's enough. Yeah, I'm not getting the error anymore. So let's see. Okay. All right. Not sure why this one is here, but yeah. Okay. I thought I should be doing another arbitrage, but it's possible the not to balance well. Let's see. Well, this one did one arbitrage, so I'm waiting for it to do another trade. I feel like it should be doing another trade if this is actual transaction status. It looks like we can actually buy and sell, buy an OKX and sell at Jupiter. But overall, I think there's actually more interesting things besides arbitrage. So the other aspect of Solana DEX is when I start exploring more are liquidity provision. So let me just explain how this kind of works before we go into more details. And initially, let's just set a few ranges in order to understand how it all works. So we'll leave this bot running, and we'll go over here and go to and let me just kind of walk through the three main kind of the main exchanges we use for this. So there's basically two types of kind of AMM exchanges. There's like colloquially in crypto we call them V2 and V3. It's because initially it was corresponding to the Uniswap V2 pool standard and the Uniswap kind of V3 pool standard. However, so Uniswap invented this, and basically the main idea is that you don't need an order book. You can just have a pool provide liquidity to exchange. So it's like that's why now there's like these V2 pools. Like this is the Hummingbot USDC V2 pool that we own. So this is one where there's some. This is where when you deposit assets into the pool, it's always half of asset A and half of asset B. And when you trade with the pool kind of keeps that half balance consistent. And so the property of this I've observed as a liquidity provider is that you kind of like don't need to worry about whether you're entering the right price or not. You kind of just like deposit the token A, token B in, but you also can't adjust it very much. So I think the V3 one, which kind of Uniswap came up with later on, is kind of like a much more flexible way of providing liquidity, because you can define the price ranges under which your liquidity is active. So yeah, I'm not sure what this migrated pool. This pool thing is a good way to show how it works. But overall, yeah, if you want to create a V3 pool, you can define like the range. So for example, with ETH and HBOT, you basically say, I'm only going to put in a certain amount of HBOT and in ETH. So all these kind of DEXs work the same way in that you're basically defining the price range like this. This UI is not very good. And then based on the price range, it determines like how much of asset A and asset B you're putting into the range. So I don't do much on Uniswap, even though it's like the most well-known of these types of exchanges. And the reason is because on Ethereum, unfortunately, the fees are still really high on the pools where there's liquidity. So all the liquidity is mostly on kind of like L1 Ethereum or on Base. The fees are still pretty high on L1 mainnet, and just because like there's just a lot of Ethereum whales that deposit their assets into the Ethereum pools, it's kind of competitive from a liquidity provider perspective. So overall, I found a lot more success doing the same type of strategies on the Solana DEXs. So on Solana, Raydium is probably the easiest place to start because there's a bunch of standard pools here. So these are like the Uniswap V2 pools. But when you deposit here, you're really kind of like depositing half of asset A and half of asset B. And this is almost like an equity play. So I actually do invest quite a lot in these standard pools. I tend to do more of these like early meme coins that I kind of believe in, because for example, this is a good one like Meteora. Meteora is a token which came out I think 1 or 2 days ago, and it's basically funds cancer research into this like very rare type of brain tumor that a founder named like Sichi Chen, his daughter has it. So I think it's an interesting kind of experiment, because it's kind of like, even though this is a meme coin and people are like degenerate gamblers buying it, it has raised I think over like $4 million for this charity. Whereas I think he also tried a GoFundMe at the same time, and the meme coin proceeds raised was like 10 times how much the GoFundMe raised. And so, but overall, so it's kind of like, for me, it's like as a trader, I can choose like which coins to trade, right? And if I have a choice, like I might as well choose Meteora, over some other random meme coin that I could be trading. So that's why my theory. That's kind of why it's. And other people think it's saying the same thing. Then I think the Meteora token is likely a decent bet. So that's why I think I like coins like Meteora, because it's not yet listed on central exchanges, but you can see that you're getting very high fees on this pool, and the reason is because lots of people trading it back and forth, and so it's likely that if you deposit today, just due to the fees, that if you hold it for like, let's say 6 months, you'll likely have more in 6 months than you do today. But to me, these standard pools, it's like they're really kind of like just fire and forget type of trades that I do for smaller meme coins like Meteora. So for example, we can deposit something like we have let's do something like 1 Sol. Just kind of like create a position. Actually, I'll do it less. Just so we have more assets to play with. So here's a $20 position in Meteora. But in order to do this, I need to go acquire some Meteora first. And so I can do that with Jupiter and buy some Mira. But instead of doing that, I'm actually going to do it a different way. And I'm going to do it by setting a one-sided liquidity position in Meteora. So Meteora is one of these kind of like a more advanced type of DEXs. And so it's a good place to kind of like set ranges as as a liquidity provider, but you can also set ranges in order to acquire assets as well. So let's say we wanted to acquire some Mira, but I don't want to buy it at the current price because it's likely that there's a lot of slippage. It's kind of like we want to be a liquidity provider because there's a lot of people trading it, right? And because there's high fees to be earned. So we don't want to be the ones paying the fees. We want to earn the fees from people trading. So that's why instead of buying outright, we're going to try to acquire this $10 of Mira through setting a single-sided liquidity pool. To do that, we can just look up the Mira token here. So we should make sure it's the right one. But the good thing with Solana is that because tokens are a first-class citizen of the ecosystem, you don't have as many issues with kind of fake tokens as you would on Ethereum, where there's unfortunately there's no kind of canonical ERC20 standard, and it's like basically a free-for-all. So let's look at the Mira token here, and so we want to buy as quickly as possible. So let's go into this lowest fee pool. Fee tier pool is likely to be one that's hit the most. So we'll add a position here, and we don't have any Mira. We want to buy some Mira. So ideally, we want to. Let's see, where is this price? Where's the current price here? Okay, so max. Yeah. There's not enough liquidity in this pool. Okay. All right, so here's the current price, and we want to, let's see, so the current price is 529. Is that correct? Yeah. So sometimes like you have to pick the right pool in order to make sure that we're actually in the right. We're not hitting a too illiquid of a pool. So let me check the current price in Gecko Terminal for Mira to make sure that we are actually not buying at a wrong price. So currently the price of Mira in SOL terms is, okay, yeah, so that's about right for the price. So we want to set that. Let's set 0.1. It's going to cost a bit of money to create the position, so we don't want to be too low. And then we'll just basically, so we basically want to set it buy it as soon as possible. So we'll set like this. We could do a bid ask like this. We want to set a bit wider. Actually, let's do this. Let's do this. Okay, yeah, we'll ask. Unfortunately, once you get the UI kind of like this, sometimes it's hard to create exactly the kind of position you want here. But okay, I'm not going to mess around with this too much, but I'll just set max here. Okay. Okay, let's do this. Okay. So this is going to cost us 0.15 because it's going to even though it's because there's a rent involved here. So let's see if we actually can create this. Now the position is created. So it's actually outside the price range. So basically the bet here we're making here is that at some point this Mira token is going to come back into this range, and then once it goes into this range, ideally, then I'll be buying it, and then I'll try to kind of close the range out in order to have those Mira tokens. So this is a way of like acquiring Mira tokens if you're a little more patient. I probably wouldn't do this for an $18 liquidity position, but let's say I want to create a serious position in a coin. Instead of buying $1,000 outright, I think it's more prudent if you're more patient to set a one-sided position like this. See, I've already kind of like, now the market's gone down, so I've already kind of acquired some Mira. If Mira kind of stays in this range, I'll be earning fees, and so it's kind of like, for me, yeah, it's kind of like you can kind of use the volatility of the token to acquire a lower entry price. So now it went out. So I mean, I could. And the risk you take is that the mirror just keeps on going up, and you don't do this. But to me, yeah, I'm fine kind of waiting around like this, watching it for a few minutes, earning the fees, and then if it goes down outside of the range, then I'll just close this position, and then I'll take my mirror and I'll add it over here in Raydium to start that position. So yeah, so now it looks like it's done. So now let's withdraw and close that position. So one thing I like about Meteora is that the rent that you deposit when you create the position, you basically get the full thing back at the very end. So actually, there was that just that the P&L thing that you guys saw. I could have just generated the P&L for this. It probably would have been positive because I made 9 cents on this. But the more important thing is that we were able to acquire some of this mirror token without incurring slippage by buying outright, and we actually made some fees as an LP by letting the market come to us instead of chasing the market. So now that we have some mirror tokens, I think it's a good, we can now create this position here. Let's actually try to max out the mirror tokens we have and max out the SOL we have and add liquidity to this position here. Okay, so we could stake the LP tokens in order to increase the yield even more. Whether you do so or not, it really depends on how much you can earn by staking. I have not been super impressed with the Raydium staking yield, so I'm not going to do it today. I also think there's a weird UI thing where if you stake it, then you don't see it in your portfolio, which makes it confusing to track. So it's kind of why I don't stake it. But overall, I think this is actually a good bet for coins like Meteora, and the reason why is because of this right here. Currently, this pool. This is probably the 0.25% pool, but it's earning an annual APR of 9,000%. So I would just take this divided by 365 to get the annual or the daily number. But that's still let's do the math right now. 365. That's still 25% per day, and so 25% per day is a lot. Obviously, we're probably not going to achieve that because this token. It's the longer that it's out, the lower the volume will be relative to where it was in the very beginning. So we should expect this to come down. However, even if it's, let's say 1%, having a position that is growing by 1% a day is pretty attractive. And the reason for that, and the reason I think a lot of these kind of meme coins have this characteristic is because they're just shelling points for attention. So if you pick the right meme coin, and it's going to be one that's going to be kind of like generate attention for the next few days or weeks or months, then I think you can be pretty sure that there'll be trading associated with that. And if you're if you're one of the main liquidity providers for that token, then you're the one earning the fees. So that's why I think overall, making a bunch of like small bets like this is where I would start, just to get a feel for like the like how to pick the right coins, how to decide where are they on the cycle, like are they on the uptrend or downtrend. A lot of meme coins, they all kind of follow this pattern. So I do think there's a lot of potential for like taking like a machine learning data science approach to figuring out where you are on the cycle, and then kind of automating some LPing like this, some very basic LPing like this in order to enter positions. But now that we have established a basic V2 position in Meteora, we can also do the same thing on the V3 side, because here in Meteora we chose this one because we just want to enter into the pool. But you can see that if we look at the other Meteora pools, there's a bunch of other Meteora pools here that we can choose from. So these are different V3 pools. So they differ by the bin step, which is the amount of deviation you can have in the price of these bins and the fee. Meteora is a bit more complex. I should skip over. I skipped over one thing, which is Meteora is actually, I would consider, I guess, kind of like a V4, like another iteration of these kind of DEXs. There's like an intermediate version which is the concentrated liquidity versions. And this is kind of very similar to kind of like the Meteora in that you can deposit into a price range, right, like this. Now the difference between this and Meteora is that Meteora has this concept of like bins, and what this bin means is that you can essentially change the amount of liquidity you have in every horizontal bin. In contrast, when you create positions in concentrated liquidity pools on Raydium and on Orca, your liquidity is constant, throughout the range. It's kind of like here you have like one big pool that you're kind of depositing into, and every person is an equal member of part of that pool. Here you can you can see like everyone's kind of defining their own kind of range, and so I can define my price range like this, but I can also change how my liquidity is distributed in this range by setting like different like distributions, like these bid curve, like bid ask and all these other things like that. So yeah, easier to see once I have tokens here. So anyway, I bring this up because I think there's pluses and minuses between using Meteora to provide liquidity versus using Orca or Raydium. The first thing is that the Meteora has become kind of like the meme coin home on Solana. So it's more likely than not that if there is some new coin, there'll be more pools on here than there would be on here. However, I actually do think that I do think you're in a higher yield actually on Raydium in these pools, because it's like the range is constant, so you don't have like this bin step thing which might incur. So sometimes the trades don't happen because the bin step is too wide on Meteora. Whereas here I've noticed that your yields are very consistent, because even a very small dollar amount can hit these kind of pools because it's continuous across the range. But overall, I think I would explore both the COMMs on Raydium as well as setting them on Meteora. So now you're probably asking, how can I do this kind of in a more programmatic way with Hummingbot? So we have started to build how this works. So it's still very early, but if you wanted to check out how this works, there's a new repo called LARP, and we've already started building this LARP repo into the Hummingbot Quantlab thing. So I'm not going to do this too much today, but let me show you how to set up LARP and use it with Quantlab, and so you can already use it to kind of like fetch data on Solana, kind of like tokens, and analyze them, and automatically kind of like do trades in Jupyter and set positions on Meteora and Orca. So the main idea from LARP is that it's going to focus on kind of LP strategies. We added the connectors to basically we're going to focus on Solana for the time being, and we're going to really focus on and build out the connectors to Jupyter, Orca, Raydium, and Meteora. And initially, because there's a lot of like possible strategies, we're going to try to create research notebooks in Quantlab. I think there's a LARP one. And we're going to try to create lots of kind of notebooks here in Quantlab that interface with LARP and kind of test out the various endpoints, analyze pools, and try to conduct a lot of analysis. And overall, over time, I think we can flesh out some strategies here in Quantlab, and then you can actually automate these strategies using the task runner. So you can actually basically create very basic rudimentary strategies already using a combination of these two. And I think over time, as they get more fleshed out, we'll try to add them into the core Hummingbot client as well. But because I think everything in the LP world is just very nascent right now, I think we want to avoid the mistakes we made in the past of like just kind of building too fast, and instead I think the approach is to try to create a playground for people to try to experiment with this right now. Okay, so let's set this up, and actually let's check out our arbitrage strategy here. It looks like it's not doing. It hasn't done. yeah, it's only done that one trade. So so I'm gonna stop this bot. I'm gonna try to stop it starting again. I think the insufficient balance thing might be why it wasn't doing much. So I'm gonna start it again. And let's see if it'll do more arbitrage strategies. Okay, so yeah, currently both arbitrage routes are negative, so that's why it's not doing much. But the nice thing is that we can just leave this running. Hummingbot is a very low intensity type of system, so we can just leave it running, and then we can install LARP and then Hummingbot as well here. So let's install LARP. We'll do the same thing as we did before, and we'll clone LARP into this repo here. Actually, you know what, I'm not. Actually, should I do that? You know what? I have too much stuff to do, so I'm gonna just use my existing LARP repo, and I'll just kind of walk you through how to set it up, because there might be some configuration changes that I don't want to introduce right now. So basically, the idea behind LARP is that this is a CLI, so it can be used on a standalone basis to like manage your wallet, like, you know, and it also has REST endpoints that can be used by other clients like Quantlab or Hummingbot. So so it's a TypeScript repo. So all you do is just yeah, kind of like install dependencies, build it, and then run it. So you'll see instructions for linking the command to the path. There might be some issues here. Please, feel free to create issues if you have any issues with the setup. But overall, once you do all this, you should be able to have a LARP command line at your client. So this is so I have some balances here. I've already added my wallet, so I can run like a LARP balance and see the balance in my Solana wallet. And then you can run LARP start. I think LARP balance is the only command we've added so far, but in the future we'll add other ones like portfolio or other ones like that as a helper, like helper functions for liquidity providers on Solana. But the other thing you can do is you can start the API client. So now, so now this is actually using my quick node. Hopefully this quick node works. But this is basically the same thing as Gateway. It's a DEX middleware, and we have a bunch of endpoints that we define here. So it automatically comes with a Swagger API. So if you go to localhost 3000/docs, you'll see the API where you have kind of more endpoints at your disposal. So this is one where you can fetch the balance for an address. So if I don't add one, I think it uses the default wallet one. And this is a list of symbols I can pass to see what tokens I have. So, oh, sorry, this is an array, so I gotta do this. Whoops, like that. And yeah, so now it's giving me the token balances for WIF and for Solana. So similarly, there's other routes here. Like this one fetches the list of the tokens available in the list, and there's and so there's other endpoints like this for different DEXs that are supported. So for Orca, and for we started adding for Raydium, and then we also added for Meteora and Jupiter. Currently, I think Jupiter and Meteora are probably the most advanced ones. Orca, I think they're in the process of changing their API, so or the SDK. So currently, this is based on an older SDK that they're in the process of migrating from. So I think at least for the next kind of few weeks, we'll probably concentrate. Actually, a few months probably. We'll probably concentrate on Meteora and Jupiter, and possibly Raydium, as well. Just try to make sure that we can. The basic kind of endpoints and strategies can work. So now once you set up LARP, and you can get that running, you can now run it with our Quantlab repo. So I'm gonna go here, and I'm gonna go to Quantlab. I already have Quantlab over here set up. So to install Quantlab, it's kind of similar to the process of doing Hummingbot in that you're going to have to create a Conda environment, install the dependencies, and then activate Quantlab. Quantlab does use the Hummingbot library, so that's why the installation process can be somewhat tricky. But I tested this the other day, so it should work. And I just need to, once I activate Quantlab, then it'll activate the environment, has dependencies. And then what I typically do is I will open LARP. Actually, here's LARP in Quantlab. And here in Quantlab, I can go to the research notebooks, and it has the let's make sure I'm using the right Quantlab. Yeah, so it's using the Quantlab Python environment here. So basically, what I did, I selected the environment. Let's see. Yeah, so I selected the Python interpreter. I said so. This Python interpreter, I select the Quantlab environment because that's the one that I installed. This Quantlab environment has the Hummingbot library and other dependencies that are needed. So got the environment, and so to test this, I'm just going to go through these and see. So yeah, this one is going to call the get tokens command. So let me put it like this. Okay, so this one calls the get tokens command. So from this command here, so what we're doing now is we're basically using Quantlab, and we're calling the LARP API server, which is running here. So this command get tokens should return the exact same output as this command here, this Solana tokens command. Okay, so. Okay, so let's do that. Okay, yeah, and let's see. Yeah, okay, yep. It looks like it's getting all the tokens that it's getting from here. So yeah, this one is here and here, matches. Okay, so now we confirm that we have access to LARP, and so now we can let's get the balance of our WIF tokens. Okay, and then so then we can go and do other things like this, like we can create positions and bundle. We can add liquidity to various endpoints. So some of this actually may not be working as some of this. We probably need to make sure the endpoints are working properly for both Meteora and Orca. But overall, the idea behind Quantlab is that you can essentially access all the endpoints in like very like in a simple set of commands like this, and now you can automate them in terms of tasks. So yeah, that's kind of where we are currently in terms of state of our kind of like our DEX integrations. However, some of the work that we're planning to do in the next few weeks are to improve the number of notebooks here. So these notebooks are we have some notebooks that are designed to analyze pools. Okay, so this one here is accessing using the Gecko terminal API to fetch all the pools that has conduct some analysis on them and try to filter the ones that you want to enter into. So I think this notebook that pulls pools, more notebooks that are kind of like adding and removing liquidity for endpoints are some of the ones that will be adding into Quantlab in the next few weeks. On the LARP side, we probably have some more work to improve the endpoints for Meteora, Jupiter, and other DEXs. For example, we're probably going to make the endpoints here address first, because right now it's still doing like a symbol lookup, which adds kind of unnecessary complexity to the operation. So we'll probably try to separate that out a bit so that a lot of these routes will be address first, and then there'll be other routes where you can do lookups for to fetch a token object for a given symbol. And so I think that, but overall, I think the reason why I think we're excited about this is because there does seem to be a number of opportunities to provide basically earn fees by providing liquidity to tokens like Mira, where we can see that the portfolio that we just created here, this one that we created was a very simple V2 pool. But we can see that it's likely if this continues to be trading activity of this token, I would say, all things being equal, assuming this token has the same valuation that it does, let's say 1 month from now, that it does today, is likely we'll have a lot more than $35 here. And the difference will be the liquidity swap fees will accumulate along the way. So I think these standard pools are a good way to kind of just dip your toes in and understand what's actually happening. But I think if you want to kind of actually play to scale, you probably want to take some of this Mira tokens out. So let's actually take our Mira tokens out of here. We'll close this position and let's transfer this to a V3, a Meteora position. Actually, let's do Raydium. Actually, let's stay in the Raydium family here. And actually, we'll remove this. We'll stay in the Raydium family, and we'll just create a simple position in the COMM in the COMM Mira, and then we can take a look next week. And actually, I won't be here next week, but probably Fede can give an update next week in terms of how this position has performed. Okay, so we've removed this position. So if we want to see what happened, we basically we can actually look at the transaction on here. Let's see. Let's actually look at the transaction over here to see the outcome of this very short trade that we placed on Raydium. So let's look at our address and in SolScan. So just to recap what we did, we basically we used Meteora to create a single-sided range to acquire some Mira tokens, and then we took those Mira tokens, took them SOL, and then we deposited into a Raydium pool for 30 minutes, harvested some fees, and we took them out. So here is the transaction that we did. So here's our wallet, and so what I'm going to show you now is how to use SolScan to kind of do some accounting and to see how much money you made or lost on a certain position. So and we have we can see the two transactions here because we have 20 minutes ago we added liquidity to this position on Raydium, and then 1 minute ago we removed liquidity from that position on Raydium. So here is the first transaction where we added liquidity. Okay, and here is the second one where we remove liquidity. So basically, we can see that we added about 19,000, 1,900 Mira, 0.09 SOL. We ended up with a bit more SOL and a bit less Mira. So honestly, nothing really happened. It was the token balance is pretty similar. But since they changed, I know that we did do some trading along the way, and the fees we earned were 0.25%. On that volume. So and that's why I do think that because we only left it for 20 minutes, the values are very similar. But if you just think about kind of project out kind of trading volume, times the fee, which was basically that 9,000 annual APR that we saw earlier, it's likely that just leaving the assets in this pool, as long as I'm happy owning Mira, it's likely the fees will compensate me for that risk. Now, but you're probably saying to yourself, well, I hear all this about like how like AMM LPs are losing money and everything. My answer to that would be, I think two things can be true at the same time. So it's possible that you can make money as an LP on certain DEXs, and you can lose money as an LP on other DEXs. And that's why I think doing some analysis is really what you should do. The most important thing is the yield. How much your yield you can earn is a reflection of the fees divided by the amount of liquidity in the pool, right? It's fees over volume, but your competition are the other liquidity providers. So I think the first thing I would do is try to pick tokens which have a lot of volume, and i.e. fees, relative to the amount of liquidity provided for them in the market. So that's why I do recommend actually looking at ones like Meteora, because these are new tokens which are getting a lot of attention, and therefore if you look at the volume to liquidity ratio, last 24 hours there was 29 million of volume for Meteora versus only 600K of liquidity. So these guys are cleaning up, right? So that's why I think, and also if you look at the chart right now, it's if you believe in this token in the long run, and of course meme coins, it's hard to they all probably go to zero eventually. But if you believe in this token will continue to get attention for the next few weeks or months, then this might be a decent entry point. Okay, so now that we have our mirror tokens, I think the reason we took them out is because I think placing ranges on Meteora or basically concentrating liquidity ranges, whether we do it here in Raydium or a Meteora, would make a lot of sense. So let's look at the two and let's try to figure out which pool, which platform we should deposit our tokens into, and also which pool we should use. So let's look at Meteora on both DEXs. Okay, so we know that we want to be in ones where there's some liquidity. So the nice thing about Jupiter and I think Solana in general is that it's almost like you can always be sure that whatever pool you deposit into, as long as there's some liquidity in the pool, it will get hit. So that's why, like for me, I actually prefer when possible, I actually prefer these Raydium pools unless I have a view on price or if I want to maintain a position for a long time. And it's mainly because I think these pools, because they're continuous, are actually acquiring are getting higher fees. So here, let's see, there's 63,000 liquidity here earning this much fee. So this fee, basically these guys, so essentially the fees are like almost half liquidity here. Do you see that? Here, let's see. So here's there's much more liquidity for Meteora on Meteora. So we can see that the TBL here is pretty good. So the one thing I try to avoid the low fee, even though we use this pool to buy it, I don't want to LP for this pool because this bin step and this fee range are too tight, and this token is very volatile. So the IL, I don't think the permanent loss in this pool is going to compensate me for providing two-sided liquidity to this. So that's why I think instead what I want to do is pick pick one of these pools. So here I would actually probably likely pick this one actually, because this one is 200 bin step, 2% fee. So it means I can set a very wide range around the price because I as I said, I don't want to. I think it might go to zero. So I think it's easier. I think it's easier to start, in my opinion, from the token chart itself, and just draw lines to say where do I want to where am I happy to own 100% Meteora, and where am I happy to own 100% Sol. So what I mean by that is when you deposit a range, you're going to be depositing Meteora and Sol. So let's assume the current price, which is 0.01 cents or 10 million FTV, is correct. And when I say correct, what I mean is it's the fairest approximation of what the market thinks the value of this asset is. So if I draw a line like this, okay, actually easier to see in Sol because we're setting ranges in terms of Sol. I think what I might say is that given this chart here, 15-minute, higher resolution. All right, so now you can't go below zero. So that's one good property of meme coins, which is you can't go below zero. But instead, I'm going to draw this line. I'm going to draw it. Let's draw the upper bound first, which is if I put some mirror in, where am I happy to just sell all the mirror? And so I think it'll be like this. Like if it reaches this price here, I'm gonna sell whatever mirror I've managed to accumulate, because that would represent something like a 2x or more than 2x above where I bought it. And then I'm also going to put some Sol into the range as well. So where am I happy to own a lot of Miro? So it's 10 million market cap. It's probably going to go down. So I would say, in my opinion, I would say it's probably something like, pretty low, like this. So maybe like, like this. Try that again. So let's eyeball it. Yeah, something like that. Oops. All right. So now that I've defined the range, this range essentially defines what I'm going to create in Meteora. It also defines like the assets I put in. So the nice thing with Meteora is that you can actually change the balance. You don't have to have a fixed amount on either side, which makes it a bit more flexible. If we're doing this on Raydium, we have to have the exact amount for this range. So now that we define this range, let's go ahead and put that into practice. So the lower bound on this is about 0.0002, and the upper bound is like 12. So we go to Mira here. We can say, it's already at 2, so let's go ahead. 2 and 12. So that's a very big bin step. So this is our ideal position. This will actually require creating 2 bins. Not so a bad thing, but this is going to create like incur more cost. So because I'm only using how much Mira? What is that like? $19 a Mira. I'll set a. I can either find a higher bin step one, so I need one position, or I can try to lower my range. So I'm gonna lower the range because this is only $20 of Mira. So let's lower range and try to bring this one in a bit more. Let's do 3. Let's try to do 3 and 10. Okay, like that. So 3 and 10. So this is so it's So let's try that. 3 and 10. So that actually definitely brings within our 69 bin range. 63 bins. It's good enough. So we'll put all the Mira in, and we don't want to put all of our Sol in because that would be a lot of Sol relative to the Mira. So I'm just gonna balance it out to try to get the amount of Sol to where it's like relatively equal. 1.5. Okay, and that's it. And liquidity. Oh, all right. So position created. Here we go. So so this is essentially like a concentrated version of the Raydium LP position that we just had earlier. This is a bit more concentrated because we've defined the exact lower bound on the price and the upper bound on the price that we have here. I like creating a Gecko terminal because now that I've drawn these lines, I think even when I refresh, it'll show them. Let me check. Yep. Yeah, it has my lines here, so it helps me kind of track just like the position I created, and I can track it over time to see how it behaved relative to the chart. But overall, I'm actually pretty happy with this particular position I created because I'm pretty sure that this is going to just generate a lot of fees. And if I check back on this position in a week, I'm pretty sure I'll have more than $446 of liquidity. But we'll see. Obviously it's everything's a gamble. I forgot to add a disclaimer, which I should do at the very beginning of every live cast, which is that nothing we say here is investment or trading advice. It's really for educational purposes in terms of explaining how these markets work and how to use tools like Hummingbot to automate your trading on them. Okay, I think this is the end of the live stream today. So what did we went through? Number 1, how to set up an arbitrage strategy between Solana and Hummingbot using Hummingbot. So it's still running right now. Let's take a look. here. Okay. Yeah. So yeah, we completed another arbitrage. Looks like. Okay. It's getting. It looks like it's actually hitting some kind of error right now. We still have to. Perhaps overall, I think getting to a point where you can reliably run these strategies on both sexes and DEXs is still a moving target. Yeah, you'll likely hit errors like this. We'll have to debug exactly what's going on. But it looks like there's something issue with server time. This actually might be because I'm running both LARP and Gateway at the same time, using the same node, and kind of trying to hit that node from both sides. But overall, yeah, I think that try to on the arbitrage side, I would recommend setting it up and trying these kind of strategies with smaller tokens, newly listed meme coins, where there's likely to be kind of like a dislocation in the market. And once you've explored arbitrage, I think another place to explore and to really play with is really to create LP positions for new meme coins, like the one that we just did. So what we walked through was how to acquire a meme coin like Meteora using a single-sided liquidity range on Meteora to reduce transaction costs, and then we also then created the position on Raydium, where we created the V2 position. We added and removed it, and then we converted that position into a V3 or a Meteora range, where it's more concentrated, and hopefully, let's see, do we have any fees yet? No fees yet, but hopefully over time we can see the Gecko terminal for this. As more and more people are trading Meteora, hopefully our pool gets used, and some of this, this 18K, 1,800, 68,000 Meteora, and this SOL gets converted back and forth, and we'll be earning 2% on every trade. Okay, so I think I'm gonna end the live stream here today. I think it was hopefully this gives you a good introduction into how to use Hummingbot on Solana and DEXs generally. But overall, we're quite excited about the possibilities of Hummingbot on DEXs. I mean, honestly, it's always been our goal, is to try to eliminate that kind of gap between the two sides. But I think 2024 really saw like a realization of the promise of AMMs, especially for the creation of like new markets for anything, and I think we're entering into a wave of experimentation. And I think hopefully we and the rest of the Hummingbot community can just try lots of things and make money along the way. All right, everyone. I think I'll end it here. I think. Let's see. Oh shit! Damn it! I see lots of messages and have now been ignoring in the live stream. Oh well. Anyway. Well, hopefully, you guys enjoy this, and we'll do it again next week. Okay. Bye, everyone. I'm gonna end this.